Hi, I'm Tom Elliott and this is my financial markets update for Hodges Real Estate. Well, it's a couple of days after the Reserve Bank shocked everybody by leaving Australian interest rates on hold at 4.25%. The reaction to this was pretty instantaneous in the foreign exchange markets. The Australian dollar jumped from 107 cents up to over 108 cents, and it still sits very close to 108 cents as we speak. Now, I guess the positive side of what the Reserve Bank has decided to do is that perhaps they're seeing an economy in better shape than what a lot of other people do. Now, something I think we've all got to think about here, though, is the fact that even if the Reserve Bank had cut interest rates on the first Tuesday in February, would the commercial banks have followed suit? I don't think so. I reckon the ANZ, for example, which has already said it will no longer pay any attention to what the Reserve Bank does, I don't think the ANZ would have passed on any cut at all. The other banks might have given customers, borrowers, back something, but at most it would have been 10 or 15 basis points out of the proposed 25 basis point cut. Now, I still think interest rates will be cut further, so we'll have to wait and see. Now, there is a bit of a bargain out there for people who need to borrow or at least fix their debt at the moment. Fixed rates are still being priced off money that was bought in by the banks at much cheaper rates than they can now get. As a result, there are some very good fixed rate bargains out there for 2 and 3, maybe out to 5 years, depending on the bank you shop with. So it might be worth having a look at those. So what about the international situation? Well, as I speak, Greece has still not come to an agreement on its debt. Now, the rumours are that Greece will write off 70% of their debt in return for agreeing to pay the other 30%. Of course, a lot of people who own that debt aren't particularly happy about this outcome, but some people say it's better to get 30% than nothing at all. No matter what happens, Europe is almost certainly going to go into a recession, and by that, of course, I mean that its GDP, its economic growth, will actually go negative over the next year or so. Having said that, there are a few bright spots. Japan is looking quite good. Post the Fukushima nuclear disaster, the Japanese government is pumping money into the economy, rebuilding infrastructure that was lost when the tidal wave hit. Also, the United States has seen its unemployment rate fall to the low 8% mark. That's pretty good given that it was pushing 10% just a year ago. And I do think if any country is going to come out of the global financial crisis and the recession that followed quickly, it will be the United States of America. History tells us that America is good at pulling itself out of the economic mire. So, US and Japan okay, emerging markets doing well, Europe a bit of a drag. What about here in Australia? The strong Australian dollar, as I mentioned earlier, it's causing some huge problems. People are saying, should we keep the car industry here in Australia? Can we profitably export cars? Alcoa is looking at closing down one of its smelters, its aluminium smelters here in Victoria. The prospect for exporters is not good, and I think the Reserve Bank has to take some of the blame for this, because by keeping rates on hold, that pushes the Australian dollar up, and that, as I said, puts a lot of pressure on manufacturers. So here in Australia, economy could be doing okay, exporters are going to find it tough. What about the property market? And that's the reason you're watching videos like this. Well, as I said, I think interest rates will go down a bit further, but not much, and it's questionable how much the lenders of money, the ANZs, the NABs, the Commonwealths and the Westpacs, will actually pass on to the rest of us. So I think those fixed rates, which look pretty cheap compared to the variable rate, I think that's something to really have a look at. The property market itself, or residential property, didn't have a great 2010. On average, prices fell around about 5 to, in some cases, 10% around Australia. My view is that the damage has been done in property now. I think with stable, possibly slightly declining interest rates, buyers will be drawn back to the market. The big issue we've all got to watch is the rate of unemployment. At the moment, it's a record low, 5.2%. If it creeps up towards 6 and beyond, well, all bets are off the table. The good news is, I don't think unemployment is going above 6%. I'm Tom Elliott. This has been my financial markets update for Hodges Real Estate, and I look forward to your company again next month.